Consumers already struggling with higher energy costs are facing another financial burden: increased minimum credit card payments. These higher payments stem from guidelines issued by federal regulatory agencies in January 2003. The goal was to prevent credit card debt from ballooning over decades. The agencies proposed that by the end of 2005, credit card issuers should set reasonable payback periods, like 7 to 10 years. Card issuers were expected to adopt these higher minimum payments by the end of 2003. This action followed years of issuers lowering minimum payments to keep customers and maintain outstanding balances. However, these profits could shrink if consumers paid off debts faster or defaulted. Some banks were setting minimum payments so low they didn't cover interest, seen as unfair to low-income or financially inexperienced consumers. This led to a surge in consumer debt and defaults. Before these guidelines, many banks required only 2% of the outstanding balance to be paid monthly. For example, a $10,000 debt with an 18% interest rate would take nearly 58 years to pay off, with 3 times the original debt paid in interest. Now, paying 4% monthly would clear the debt in 15 years, with much less interest. Banks have also raised charges for cash advances, late payments, and exceeding credit limits, pushing consumers further into debt. These changes mainly affect cardholders who don't pay in full each month. Most top credit card issuers raised minimum payments in 2005, after regulators encouraged adjustments by the end of that year. However, this delay led consumers to face higher bills during the 2005 holiday season, combined with stricter bankruptcy laws. Banks attributed the delay to updating systems. Although regulators didn't specify a fixed increase in minimum payments, they recommended payments cover fees, finance charges, plus 1% of the principal. Some minimum payments doubled from 2% to 4% of the balance. Ultimately, these changes benefit consumers by helping them pay off credit cards faster. But initially, those unprepared for higher payments, especially those with lower incomes, may face financial hardship.